Hi everybody, welcome to Easy Finances. How are you guys doing today? In this video, we will talk about the recent happenings of the crypto market, how the bear market is affecting the crypto industry, and we will also talk about different scams happening in the market, the crash of the Solana's network and Cardano's increasing popularity, and so much more. So let's get started. The first news is JP Morgan CEO Dimon warns of incoming economic hurricane. He said, "You better brace yourself." Now guys, recession is incoming, and he said, quote, that hurricane is right out there down the road coming our way. We just don't know if it's a minor one or a superstorm Sandy. You better brace yourself. We are constantly getting these recession warnings. CEO of Soros Fund has also said that recession is inevitable and crypto is here to stay because crypto has already become mainstream. She said, quote, "There is a lot of discussion about a looming recession, and the bottom line is that recession is inevitable. It's just a matter of when it is going to happen." She thinks really highly of crypto, and she said that blockchain technology is going to have some great applications. So guys, we are in a bear market and recession is coming. But crypto is not going anywhere. Instead, crypto industry will surely grow exponentially in the future as the mass adoption of crypto is happening in the world right now. But crypto industry is also facing the wrath of incoming recession and the current bear market. Talking about the bear market, Coinbase announces cost-cutting measures as crypto firms face bear market. Coinbase has said that these cost-cutting measures will extend our hiring pause for both new and backfill roles for the foreseeable future and rescind a number of accepted offers. This hiring freeze is a continuation of a plan announced last month. Not only Coinbase, Gemini has also laid off 10% of its staff, which is around 100 people. Other exchanges are doing this as well. For example, Latin America's top exchange Bitso fired 80 employees. Argentina's Benevit nearly halved its staff, and Middle Eastern exchange Rain reportedly laid off dozens. Bitcoin miners have also felt the market crunch, and they are bracing for its impact. Bitcoin miners have begun dumping their BTC holdings. Bitcoin miners have held on to their spoils of their activities. That is when the profitability of mining the cryptocurrency was still high. Due to a high cash flow, these miners could afford to hold on to a good portion of their rewards while being able to still carry out their operations. However, the recent market trends have tanked the profitability of Bitcoin mining almost up to 50%, leading these miners to start dipping into their BTC stash. Even a number of prominent Bitcoin mining companies are coming out to say that they have sold or will be selling some of their BTC they are holding right now. One of such companies is Marathon Digital. Marathon Digital is a top contender in the mining world of cryptocurrency, and it had announced that it may have to sell some of its Bitcoin holdings. Marathon Digital holds more than 9,600 BTC, most of which it has held for almost 2 years now. However, it seems the day of reckoning is fast approaching, and even large companies like Marathon Digital will have to get rid of some of their BTC. Faith in Bitcoin mining stocks is also on the decline, so now miners are forced to sell some of their BTC holdings to be able to keep their operations going. Now, moving on to the news how traders got caught in a bear market trap. Over 590 million of long positions got liquidated as traders rushed into the Bitcoin price rally. Bitcoin's price has risen by over 8% in the last 7 days, going beyond $31,000 mark over this weekend. On Tuesday, it was trading near $32,000 mark, a considerable gain from an earlier month's 6-month low. So guys, this was the first time Bitcoin has surpassed $31,000 mark since early May. Over the previous 2 weeks, its price has been hovering around or below $30,000 mark. As a result, the recent price jump drew much attention as many people expected the flagship cryptocurrency to continue its price rise relief, which did not happen as expected. So a lot of investors hastily put their funds into the market. Bitcoin began another descent, falling below the $30,000 mark. This resulted in about 500 millions of long positions being liquidated as many traders got caught up in the bear trap. 86,926 traders have been liquidated in the last 22 hours for a total of $592.5 million. So guys, this is a very important point to note, that it's never a good idea to rush into any position, especially during a volatile market like we are experiencing right now. If you feel rushed to open any position, that's a red flag that you should stay on the sidelines until you have had more time to think and analyze the markets. Another takeaway from this video is that many crypto influencers are dangerously bullish at all times, simply because they are looking to attract as much attention possible to their YouTube channels or Twitter accounts. So always take their advice with a grain of salt and do your due diligence. So you always need to do your own research before taking any step in this volatile crypto market. Moving on to pig slaughtering crypto scams reap millions on Silicon Valley dating apps. So guys, pig slaughtering or butchering is a type of scam in which an individual or a group puts in weeks or months of work to build a fake relationship with the victim, metaphorically fattening them up. The end goal is to get the victim to invest in a crypto via either a duplicated version of a legitimate website or by transferring funds to a dodgy wallet address. Now, these scammers often shift the conversations over from dating apps to encrypted messaging services such as WhatsApp, and put in countless hours of daily conversations to make their fake personas seem realistic without ever actually meeting in person in most cases. And the victims who believe these scammers end up losing a lot of their crypto money. So guys, be aware of these scams. Sometimes you think that this is not going to happen to you, but it happens to you and you end up losing lots of your money along with your confidence. Now let's talk about Solana's ecosystem. A bug brings down Solana blockchain for 4 hours. This resulted in 11% drop in Solana's price for the day. The issue was reported on Solana's Twitter account at around 1 p.m. ET. The bug caused a part of the network to consider the block is invalid and that no consensus could be formed as a result. Validators were able to restart the Solana network, but it took them 4 hours and 10 minutes. Now guys, this is not the first time Solana network was down. Last September, it was down for around 8 hours because of the overwhelming transactions sent to a DeFi protocol for a new token launch. Last April, Solana network crashed when NFT minting bots overwhelmed Solana with around 6 million transactions per second. This continuation of crashes on the Solana network has led to people losing faith in the Solana network. Solana has been called the Ethereum killer because Solana platform has become really popular for NFT collectibles, decentralized apps, games and DeFi services. But right now Solana is being criticized on social media for these never-ending halts. But on the growing aspect, blockchain toolkit Alchemy has launched Solana developer platform. Alchemy, best known for its Ethereum tools, now supports Solana development. The Solana kit is being released today in gated beta with wide availability promised soon. This means that only certain developers will be able to use it first, and then it will be available for the public in the coming weeks. Alchemy made its name building tools that simplify common Web3 tasks like writing transactions and hosting nodes. The company's core offerings revolve around Ethereum, but in the last year, it has begun tailoring its services for other blockchains such as Flow and Polygon as well. Now that Alchemy is partnering with Solana Network, it will make Solana ecosystem more faster and easier to build new applications. Next news is about Cardano. New stats show Cardano on the up despite crypto winter. So guys, Cardano Foundation has released its monthly wrap-up of on-chain data, which shows that its on-chain transactions have increased by 7.74% to reach 42.5 million. Cardano project Catalyst funds have funded 947 proposals. The number of unique wallets holding Cardano has risen to 3.36 million, a slight increase of 1.84%. Cardano's number of native tokens has jumped by 8.64% to reach 5.03 million, and there are now 2,761 port scripts on the network, a 5.47% rise. So guys, the largely positive matrices have also been reflected in the price performance of ADA in the last 2 weeks. The token has risen by 10.8% during the previous 14 days and 9.3% over the last 7 days. The network's enthusiasm is at a high as enthusiasts are expecting the Vassal hard fork. Vessel hard fork will happen at the end of this month, and it is promised that this upgrade will help improve the network's small contract capabilities. So guys, Cardano seems to have a lot of potential for the future. Even the crypto analyst Austin Arnold has kept Cardano in the list of altcoins which he thinks are worth investing in this bearish market. He pointed out that Cardano's move of minting 5 million NFTs is saying that its ecosystem is currently blooming. So guys, what are your thoughts on Cardano? Do let me know in the comment section. That is all for today. If you have liked the video, if you have got value from the video, then do like the video and consider subscribing. I'll see you in the next video. Till then, bye-bye.